up and jump out of his skin and defend that stock as much as he can to the end of the earth. And I think we're at that point where Ben Callow said today from Baird, peak pessimism. It's everything that they say about the stock is wrong with it. I think we're at peak, and if you could just
you
turn
think we're
around,
at peak pessimism with the stock at 277?
Yeah, that's the beauty of it is that we're only at 277 and we're at peak pessimism. Have you seen any pro comments or articles on Tesla in the last 2 weeks, 3 weeks?
I don't think I'd see them when the places I'm looking.
But Steve, would it change if we had this kind of marks and website that kind of analysed journalists more? It's fair that there's been criticism. They've missed delivery numbers.
It is 100% fair. He has missed every production line. His margins have been squeezed on the Model 3. So we're looking at a bunch of things that are true. Consumer Reports. This is not a made-up article, but his angle on it is they tested the wrong car. The ones that we tested stopped at this amount of distance. So not to get too granular, but this is something that they can fix over the air, as he said. If they can, the stock should rally. If he can get those margins of the Model 3 in Q2 flat and 3 and 4 up, then the stock should rally.
No, Craig, we should move on. Talk a little bit more broadly about the markets. You think anything interesting happened there with the Fed minutes, or what's on your mind more broadly?
Oh, I like this market, and I've done a little work on midterm election stock markets, and it's a surprising outcome. Nothing happens for about the first 9 months, but since 1962, if you take the low of the year of a midterm election market, go out 12 months, the average return's 30%, and since 1946, the S&P 500 has not declined in the 12 months following a midterm election. So I think we'll see more volatility, but I think stocks are cheap. I think there's a lot of opportunities out there, and that's what we're doing at the Hodges Funds, is looking for those good companies that go on sale.
And you like the smaller caps rather than the bigger caps?
Yeah, and actually, small caps are starting to really outperform. I think Russell 2000's up, 5 or so percent. All the other averages are pretty much flat for the year, and it plays into they don't have tariff issues, and they're the biggest beneficiaries of tax cuts, or the biggest beneficiaries of decreased regulations and such, and repatriation plays right into them because of M&A, and so things are really lining up well for small caps, I believe.
Rick, it's a strong day for the dollar, but not against the yen. Talk us through the moves we're seeing there in the currency markets.
Yeah, I know. It was a great day for the dollar, and there's always cross currents when it comes to what's going on in Japan, the Bank of Japan, the Japanese economy, their first negative quarter of GDP in several years. But I do caution about getting too nervous on the greenback, because when the rather dovish minutes were released, it did break like pretty much everything moved. Yields moved lower as well, but the dollar still managed to put up a nice gain, a little better than 3/8 of a cent. 94 handle, haven't had that since early December of last year. It really was all about the Fed. The Fed changed things, and it still disappoints me a bit that the stock market's knee-jerk reaction to more dovishness is still in a rally. They need to break that. Easier said than done. What the Fed's doing is not only logical, it's late in coming, but I give the central bank a lot of credit. They've built some insurance at 150 to 175, but you did see 2-year note yields drop, but you can have a flatter curve even when yields go down, because the 2-year note yields were down, but so were 10-year note yields. So down 4 and 2s, down 6 and 10s. 30-year bond kind of off in its own little world. It was down 4, but I do think that the dollar did very well considering all the moves I just described, and I would like to throw a bone out there for the technicians. We did lose that 303 in 10-year notes when we traded through it and opened ourselves up to comps going back to 2011. Many said it was 3%. It really is 303 if you want to be a technician. Once we closed above it towards the end of April, we haven't settled below it since. Today looks to be, with several hours left in the cash market, a day that will occur. So you might be looking at some consolidation, especially going into this holiday weekend, with long-end rates easing back a bit.
And just quickly, Stephen, a word.
Are you a stock or an options trader that is absolutely fed up with ordinary results? Are you ready for your breakthrough? I know how you feel because everywhere I turned throughout my trading journey, everywhere I looked how to produce phenomenal results within a short amount of time, everybody was telling me, no, it's not possible. It's not real. It cannot be done. So I got fed up. I discovered the 5 core fundamentals that helped me turn $12,000 into $466,814 in less than 7 hours trading options from my laptop. I know this probably sounds unrealistic to some of you, but the truth is I did it. I will share with you in this interactive video course specifically everything, every single detail, every action, every stock that was traded. As a matter of fact, I'm sending you my brokerage statement listing every trade that was taken that day. I realized one thing when I accomplished this is that I wish I had someone years ago when I was starting my trading journey and throughout my trading career that has shared these 5 core fundamental principles with me, because that would have saved me a lot of headache. That would literally save me a lot of heartaches, a lot of lost and suffered relationships. That would have saved me a lot of losses. That would have saved me a lot of time from discovering all these answers on my own. This is what you will be able to learn from this interactive video course. Secret number 1, discover the best stocks for trading options. Secret number 2, discover the top 3 best chart patterns for huge returns. Do you struggle with the decision, should I sell now or should I wait? And sometimes when you make a decision, do you see your profits vanish, or do you drown in the regret when you get out of the position just because you see how much money you left on the table? Don't let this ever happen to you again. Secret number 3, discover the key to locking the gains. Secret number 4, knowing the trend will make you money. Discovering the TRO versus the trend will make you a fortune. Secret number 5, the holy grail of all secrets in trading. Timing. Can you only imagine if you knew specifically on which days to trade and on which days to go fishing and enjoy life? And the secret number 6, the truth behind of how to trade the news that will take all the guesswork out of the equation and will help you trade with great confidence and extremely high probability. Today is your day. Are you ready for your breakthrough? If so, simply find the link or the button below this video. Click it. Get a free PDF with more details. Life is too short. Don't waste another minute of it. Take action now.
Cash 2709 to be exact. We're well above it now with 20 points, 20 handles above it. But to Rick's point, that the Fed was so dovish that with light volume, it's kind of hard to reverse it. You would think there would be a little bit of pressure on the market, but with the Fed being so dovish, you would look for these gains to hold, especially during this week going into a 3-day weekend.
So dovish?
Yeah, I think it was, the market has interpreted it as so dovish. It's a technical term, right, Rick? So dovish.
Exactly.
See what I did there? It's long O.
It's sort of like a valley.
And if you want to give it the Harvard thing, you go so dovish, yeah.